Hello, my name is Steve Bigelow with the Candlestick Forum. We've got some good evidence or good confirmation of what creates high probability trade setups. We know the T-line is a extremely high trend indicator. So when we're using candlestick analysis, we can see where there was a strong sell signal and a close below the T-line. Today, the market traded up, but stochastics are still in a downtrend, and we're using the T-line factor, a very simple rule. As long as you haven't closed above the T-line, you're considered to be in a downtrend. That same scenario can be applied here on the NASDAQ. Now, these are pieces of visual evidence of when a downtrend is in progress. Notice the prospects of a J-hook pattern that formed in the NASDAQ last week. But as soon as they closed below the candle that told us the bulls were in control, that's pretty good evidence that that's been negated. The bears are now in control. And the other piece of evidence was, if you're in an uptrend and it's ready to go up to a new high, if you get another sell signal before you get to that new high, that tells you the bears have taken control, you're in a downtrend. So today the NASDAQ closed as a doji just above the 50. However, stochastic still heading down. So very simple. You use the doji rule. Doji rule is it's going to move in the direction how they open after a doji. If they open this positive, it's good evidence they're bouncing up off the 50, not necessarily starting an uptrend, but possibly a bounce back up to the T-line. On the other hand, if we wake up and the pre-market futures are showing weaker trading, that tells you this downtrend is still in progress. Now, when we use the evidence that is visually identifiable in the market indexes, that creates high probability candlestick chart factors. Anytime we see a pattern, such as a dumpling top, remember our recommendation on DWAC was based upon this dumpling top, failure to get back up above the T-line, and then started gapping it down, making for a very good short trade. Now remember, these setups are based upon high probability. That's the word we stress. The probabilities are pretty strong. That does not necessarily mean a guarantee. But the fact that the Japanese rice traders have illustrated these patterns over hundreds of years based upon reoccurring human nature, it just gives you high probability trades based upon what human nature normally does. The bearish Harami and Unity, the gap down. The probability factor when we recommended shorting this today was you were heading down. That was the probabilities. It didn't perform very well today, but it still has the prospects of heading down. Or your prospects are better. Our recommendation on Monday, based upon the bearish engulfing signal, closing below the T-line after failing at the 50, followed by a gap down, stochastics heading down. Still good probabilities you're in a correct trade going in the correct direction. And your prospects of even bigger trades, when we recommended going short on IMTE, was based upon a close below the T-line, and today it was down 34%. We always kind of put out that rhetorical question. Do we always get into big price moves? Definitely not. But the probabilities of being in big price moves are greatly enhanced using the information built into candlestick signals and patterns, both on the bearish side or the bullish side. ANDE Anderson, you can see the visual probabilities that this is a trend channel. And after days of indecision and bullish trading, at least you can calculate where your next upside potential may be. This is nothing more than identifying the nature or the signals at support and resistance levels, and then the confirmation of those signals. So anytime we see a situation where we've got a bearish signal, a bearish engulfing signal, gap down, and a doji, if it opens lower tomorrow, what do we got? We've got the bearish doji sandwich that tells us our downtrend is still in progress, probably coming back to fill this gap. So this is why we entice people to come join us in our 2-week free trial, because everything that you view in a candlestick chart is just common sense put into a graphic depiction. Also, I want to have everybody mark their calendars for April 23rd. We're going to be doing a full day training on option trades, the correct option trade setup for specific candlestick signals and patterns. Not every trade is a buy the calls or buy the puts. Where do you buy the spreads, which are much more effective? And where do you buy or sell a spread? These are not difficult trading strategies, but applied with the common sense of candlestick charts, it just gives you high probability situations for making good profits. That'll be it. We'll see you in the chat rooms.